Good morning, folks. Not sure what was going on here, but every time I tried to use the previous link to start the stream, or the Twitter space is called what it is, the Twitter would just stop working and collapse on me. So I had to restart my phone and had to start a new Twitter space thing. So I'm not sure if that helps any of you by tweeting the new one, but it is what it is. So hopefully everybody's doing well. Today we are about to watch some serious carnage. And this is a market driver that I do not trade ahead of. I don't put a trade on. You're not going to get a dose before CPI release. I haven't done anything this morning, nothing. I'm just sitting here waiting. And I'm opening my charts up for the first time, trying to get a feel for what it may or may not do here. Not that I'm claiming to be accurate, because you can see the two times I did CPI and cosine where I thought it was going to go right before it releases, I was dead wrong. So that communicates perfectly why I don't trade ahead of it, and that's why I teach my students not to do it either. I've never figured it out, and I'm old enough to know that I don't care to now. I can engage after it starts. All right, so I'm looking at the ES, and give me a second here because I'm going to try to pull up the equivalent with the US 500 and get that out of the way, because while we're going, I probably won't be doing much of that, and I apologize, but it's very easy for me to get distracted. All right, so one of the levels I've been watching is on ES, March delivery 2023, the 4018 level. That's one I've been watching. And if it would have got to it right at the time of CPI, then that would be really, in my opinion, much more interesting. I don't know if it's going to explode higher. I don't know if it's going to, crash hard. I don't ever claim to know that. I just know that I don't want to be in there because it will be one-sided and immediate, like a lightning bolt, and I don't want to get hit by that. I don't want to invite any of you to suffer that either. So let's go into the hourly charts real quick. See what's up with that. There's been a lot of lift since Tuesday. I'm just comparing US 500 to ES. That way I can get my bearings, and that way you'll have levels that I've found interesting at the moment. As clean as that area is on your hourly chart for ES and on US 500, US 500 sell side liquidity around 3,800, and well, we'll just say 3,800 across the board. That's a huge pocket of liquidity down there. Like, it's huge. Like, that's an enormous. Large funds have their trade stops below their sell stops. But the way you're pressing up into this keeps digging higher and higher and higher. You know, I hate to say it, and I'm perfectly comfortable being wrong. To me, it makes no sense to vault higher from where we are. It could, but I mean, I'm not going to lose anything, obviously. I don't have anything in the race here. But to me, it would make more sense for them to reprice it lower aggressively, even if they're going to send it higher longer term. Like, they can send it lower on CPI, mess up all the, not that I think it's going to be a 200, or what would that be, 170 handles. That would be a lot. So what I do is I wait. I'm going to look for obviously the initial 30 minutes or so, see what they leave in the wake of that aggressive one-sidedness the CPI usually is. Every single month, you need to be aware of what's on the economic calendar. And there are certain things, certain market drivers that we do not stand in front of. Rate announcements and CPI and non-farm payrolls, the top three. I had questions regarding like PPI. I don't have a fear of PPI. I've traded ahead of that one, but this one here, this one's dangerous. Like it's very, very dangerous. So what we are looking for and what I'm specifically looking for is the market to hit at 8:30 when the news comes out, the CPI number gets released to the marketplace. The market's going to go one-sided, all in one quick 1 or 2 minute candle. You're going to see the bulk of that move. And I want you to really think about what you would be feeling if you were in that move and you were on the wrong side. It's so easy to listen to these yahoos on YouTube and Instagram and such and Twitter. Staying, here's the trade I took in CPI. I had it right. Come on now. If you felt that strongly, you would be out here publicly calling beforehand with your stop and everything else. No one in their right mind would do that unless they're playing in a demo, which, we execute in demo, but even in a demo, I'm not going to try to do that here. So typically, CPI in the last few times that we've seen it, it's been anywhere between 75 and 100 handles, like instantaneously. It's repricing. So I'm looking at how that would translate 50 to 100 handles, one-sidedness. What would they reach for? And that's kind of like what I'm scanning through the charts for. And I don't have a real clear idea what they might want to do in regards to that. I mean, if they push it higher and just really run against that three highs that was formed on the daily chart for ES, and you can see the same thing in the US 500. So that my comments are general enough that they can be applied to both. Wow, 4100 has a small SIBI. Let's see if I can get this to. Why the hell is not TradingView doing this? All right, one of the levels, if they get wild with this and send it higher, take a look at your 1 hour candle, 60-minute, on December 13th, 2022. This is for ES. Okay, there's a fair value gap right in there, and it's just above the high on December 14th. This is your hourly chart for ES. And let's see if I can find the equivalent for you. Yeah, it's the same thing. You would see it on US 500, same thing. So that one single candle passed through and with a down close candle on your hourly, that's December 13th. It's a Tuesday of 2020. That is just above the high formed on Wednesday, the 14th of December 2022. Okay, so note that level. So put your trend line ray or horizontal line on US 500, I have on my 60-minute chart 4053.9. I have that noted. And on ES, I have 4090.75 for ES. And the fair value gap low is 4095.50. And the high of the fair value gap on ES, 60-minute chart again, 4111.25. So there's your fair value. There's the three levels I think are things to watch this morning for upside. I don't know if it's going to go up there, so please don't take this as I'm telling you it's going to go up. I don't know. I don't have a trade in. I'm not putting a trade on. I'm waiting, okay? But I'm just giving you levels that I believe are going to be likely targets if they really send this thing higher. Now on the downside, I don't know. As much as I don't want to subscribe to the fact that it might continuously go up, I don't see it down here. It could obviously just collapse and do an enormous drop, but I have nothing that I can call on. I mean, the 3900 has a low on Tuesday's low at 8 o'clock in the morning. You can find that also on US 500, but I'm gonna co-sign it and just say I think they're gonna push it to 4090. And if it can get overzealous with it, 4111 on ES, and then the levels respectively on US 500 would be 4053.9 to 4058.2 with a 476.1. So those levels for US 500. Now, if it collapses and goes other direction, 100 handles or whatever, no harm, no foul. Now we just hit our 4,018. Now, if I was going to sink it, I would do it from that level because it's done the 4,018. You're probably asking what that is. Here we go. Look at that reaction. You're probably wondering what that 4,018 level is. It's a wick on the weekly chart, half of the wick. I just want to watch this a little bit longer here. There's sell side right at the low on Wednesday, and we're all still focused on an hourly chart here. On Wednesday's low at 1 o'clock. Now there's a gap if you drop down to your 15-minute time frame. A gap has been produced, and we're going right back up into it now. An actual gap where there was no price data printed. So far, it looks like they'll want to take 3,900. The reaction at 4,018 I was interested in. They went right up into it. And you want to see if it wants to rip down into the low at 145 in time. I'm going to give you this as time 01:45. That's the time on Wednesday, January 11th. Note that low. There's sell side right below that. Not that CPI is ever easy for me, clearly. It's not easy for anybody. But this one's a little bit more trickier. US 500, severe gap. Note on ES, the low at 39.88 and a half. 3988 decimal point 50. That level has not been traded back to. There's a hard gap. So far, it's only gone back up to 3986.75. So there's something of a small gap remaining. So watch and see if it wants to run up into that level. It can overlap that, go back up into 3993.25. Anything more than that might challenge the high at 4018 or thereabouts. I'm going to go out to the weekly chart and show you the candle and how I derived that 4018 level. Give me a second here. It just closed in the gap on ES. I apologize. I said weekly chart, didn't I? It was on the daily chart, and you can find it on Wednesday, December 14th, 2022. That down close candle on ES. You're going to measure the closing price to the low, split that range in half of the wick, and you'll get to that 4018 level. Back into the 5-minute chart, and we've completely revisited the break lower. So turn your attention to running above that 4018 high. There's no other reason for it to have gone to where we are right now. This feels like they dropped it down and then likely to fade it. US 500 has closed in its gap entirely. And it doesn't feel like a typical non-farm payroll or FOMC where the first three actions like the fake move and then you have the opposite direction. That's generally not what you get with CPI. But right now, looking at it, I'm kind of getting that vibe. Meaning, in plain English, that the drop from 4018 down into almost 39 and a half, that may have been the fake move of the day, and they'll probably want to just keep repricing it higher. I don't know that yet, and it's still too early. It's literally only been 6 minutes since CPI hit the market, and the rule is minimum 30 minutes. So I'm saying wait until equities open at 9:30. And if it moves, so what? It doesn't matter. I mean, you're not trying to put your entire career on the stakes of whether this one individual day or morning session on CPI data is successful or not. So you don't want to place that much emphasis on one decision, especially on a high rolling gamble like this is. So this is when I usually look at the market and think to myself, this is where I would have gotten hurt as a younger man. It's very, very hard. It's very, very hard to pick where this is going to go on a market release like this and to trust it. Where do you place your stop? So that right there immediately puts me on, I can't touch it because I have to have a stop loss. I'm not like those individuals you see live streaming out there. They'll put trades on and they don't have a stop loss on. To me, that's scary. Like, that doesn't make any bit of sense doing that. Because even though the market isn't likely to create moves like this just occurred here on any other given day, it can. Like, anything can happen on any day, which is why you have to have a stop loss. But even in instances like this, a stop loss doesn't protect you. It can gap right through it. And the first traded price becomes where they're going to execute your order. And that's slippage. And that can be horrendous on days like this. So you want to avoid it. Typically, when you see, I'm watching this gap on 5-minute chart, 08:25. That's your time, 8:25. Okay. There's a fair value gap on the 5-minute chart. We've overlapped it a little bit. So your next line for liquidity, you want to have that at, give me a second here, 39.54 even. $39.54 even. If it runs that, then you would be looking for 34.75 sell side liquidity right below that low. Anything above 4,007.50 sets the stage for a run to 4,030. What is it, US 500? You should have a line on 3942.6. Now, if it can take out 39.54 and 39.34 3/4 on ES, I like the level 39.27 1/4, so 3927.25, and I like 3900.50. That would be my hypothetical. Not that I'm in a trade. I'm not in a trade, and I promise you, you will not see a recording. I'm nothing. I'm right now just studying it, just like you are right now. I'm trying to get a feel for it. And can I get myself on side reading it right now? And so far, I'm not. I'm not on side. I'm not accurate about anything right now. So just watch it. And what I'm doing is I'm trying to get a feel for, does it show me states of heaviness where it wants to go lower? If it does, then I'm going to look for logical levels where it would want to go there. But anything above 4,000 now, or 4007 sets the stage for a run to 4030. And if it gets rather accelerated above 4030, then I would be returning my attention to 4090 and 3/4. And that would be where I would look for the day or going into tomorrow. So it's a lot of weighing out, which is unfortunately what you don't get to see or even experience, because when I'm doing my setups and I'm executing, I'm watching these types of things. And that's kind of like what I'm commenting on when we're doing our live sessions. And many of you are going to be frustrated because it's going to be like, give me a trade, give me a stop, give me a target, when I'm just going to be reading price with you over a chart, showing you what levels should stay where they are and kind of like walk you through. And I'm trying to do that now with your chart audibly. And right now there's nothing to really build on except for I'm measuring, is there an interest by the market wanting to grow to either 39.54 for sell side. And if it does, then we can trust that it's likely to go down to 39.34 3/4. And how much below that? I like 39.27.25. That all changes. That whole idea changes without me having to be in a trade if it moves to 4007. And what was the high on? And the reason why I'm saying that is the high at 835. That high is 4007.5. So 4007.50 on a 5-minute chart. You should see that short-term high. So if we get above that again, then I'm looking for it to run to 4030. And then I would be measuring the speed at which it trades to either 4030 or how it trades to 39.54. Speed and how fast it gets there, either direction, that's what I'm looking for. I'm measuring that. I don't care which one it does. I don't give a hoot. I'm trying not to cuss. But the long and short of it is I'm trying to get a read on what price is likely to do. Now, if you were holding a gun to my head, I believe we're going to take 39.54. That's what I believe right now. So if you want to know what I'm thinking, if there was a way of measuring what do I think is more likely to occur, it's the 39.54 level dropping to 39.34 and a quarter. I'm sorry, 3/4. Ultimately reaching to 39.27 and a quarter. Why that level, Michael? Why did you come up with 39.27 and a quarter? He's in my head. All right, watch that high at 4007.5. In my opinion, there's no reason for it to go back above that unless it wants to go higher. Now, what happens when I get either one of those circumstances in my charts? Like if it goes above 4007.5 and rips right through 4018. What do? I drop down to a 1-minute chart. And the same thing would apply for if it drops down below 39.54 for ES. Now, for the folks in US 500, I apologize. This is why I'm not going to be able to do this efficiently when we're doing live streams and such. I'll pull the charts up. I'll draw the lines out, but I'm not going to be commenting that much on it because I'm already getting, they're sitting right next to each other, but I'm getting disoriented like I did the other day when I was, trying to discuss them both. I know some of you are going to be very angry about that, but I'm trying to make the best of my own skill set. I can't be distracted. I don't trade the US 500. So that high, if it goes above, for the US 500, 3984.26. I'm sorry, 3984.6 rather. If it goes above that, then it would most likely run to 4,000, 4,005 on US 500. I don't see that, but I just want to make sure I come back to that one because I know I didn't mention it. But the low on US 500 that my interest is on is at 3942.4. And where can that go if it takes that out on the downside? I believe that it could reach 3921.6. So that's your US 500 levels. And that all changes for US 500 if we trade above 3984.6. So in layman's terms, I believe right now it's more likely to drop down to take the sell side at 39.54 than it is to go above 4,018 again. I'm prepared to be wrong because I'm not in any trade, but I'm looking for either one of those circumstances to pan out, because then it would give me the direction in which I'm going to try to look for setups at 9:30. In other words, it gives me my bias. What would I do? What would I hunt? You're going to hear my stomach growling. I apologize. I fast in the morning. The dropping down to a 1 minute chart, whichever one of these levels gets taken out, then I'll watch 1 minute market structure and I'll look for a smaller short-term low to be taken out if it's going to be, bearish, and then look for a fair value gap or a breaker, something to that effect. And then I would go short. Vice versa, if it takes out the 4007 level, I would look for a 1 minute chart shift in market structure. In other words, a short-term high to form, not as soon as that high is taken out. That's not what I'm doing. I'm waiting. I'm waiting for it to get to 9:30 because time is the first element in price delivery. It's not price. It's time. There's a time for everything to occur, and it all runs on time. Someone starts talking to you about how you're going to be trading algorithmically, and you are not using time-based charts. You're not trading algorithmically. Okay, you're not, because that's the first element. And I'm not saying things are going up and down because of a chart pattern. It's just that's the measurement. That's why I even use it. I don't even need the chart, but to communicate what I know and to make a language that way you can learn from me, the chart does the process of showing the time element. So if you're using range bars and anything like that, you're not going to get to algorithmic output. You're not going to see it. You will not see it. You might come up with a religion thinking that you do and call it a logic or an algorithm, but that's just contrived. So there has not been a whole lot of movement. Now, on your ES, I heard make mention of this. When your ES 08:40, that's time, use a short-term trend line, drag to the right off of the opening price at that 0840 level. The opening price on that candle is 3988.25. Okay, and the high is 3992.25. That's usually when I draw out levels. I'm going to watch and see if they are respected. They're like order block theory. And I want to see those levels if they come down and touch it. If it kisses it at the top of the wick and reacts and strongly moves higher, that's a signature I like to see. So far, we've already touched the top of it. And we'll watch to see if that 5 minute candle expands like it's doing here, and watch and see if it doesn't have the momentum to take us through 4007. 0.5. And on US 500, the same candle at 840, that's time 08:40, a 5 minute chart. You want to have a horizontal line segment on the opening price if you're following along on US 500 at 3965.4 or 3969.3. Both of those levels, I usually have that on my chart, and usually you'll see me highlight the wick and the body. If it's a small little tiny little wick above, I'm looking for both levels. And I want to see the wick be respecting it majority of the time. But if it deviates below that, I will accept the fact that it can come back to that opening price of that down close candle at 840. If it starts to show signatures of respecting that, then once it starts to move away from it, and we haven't really seen that yet, but if it does, then my eye goes to the midpoint of the body of that down close candle at 840. That's mean threshold. Once it starts to respect the candle that I see as a potential order block, I never want to see the middle of that candle be broken. It can trade to it. That's fine. It's preferable that it doesn't do that. So we would prefer to see these candles right now. I'm going to literally go into just discussion of the ES because I'm looking at the US 500 and I know I'm going to get these levels called wrong, but I've given you enough here. We're watching for it to see if it can go through the high of the candle at 835. Okay. So I think if we talk like that, you'll be able to still track me on US 500. I apologize. I'm trying to do the best I can. I know a lot of you don't have real-time data for ES, but you know, I can't teach effectively if I'm being distracted looking at other things. Okay, you see how we're expanding? We've already got, that's 5 handles right there. Now, all you're looking for is an opportunity to see something like that unfold with a larger draw on liquidity. Okay, for instance, let's just say for the sake of argument that we believe that 4018 is an upside target from where we are right now and that down close candle at 840. Okay, as it opens up on the candle that we're at for a 5-minute basis, so we're still looking at a 5-minute chart right now. Right now, present time, we're at 08:50. That's time. Okay, 0850. That time candle, it's already offered what I'm telling you to look for as your minimum threshold objective for trading, which is when you go in, you're trying to learn how to do this. Okay, you have to have a realistic target of what? Well, what's realistic to me? I think anybody going through the model that I taught on 2022 YouTube channel, you know, the mentorship ICT, you can easily get 5 handles with that, easily. And you can find multiple instances of that throughout the day. So it's very forgiving for someone that isn't precise yet. So it allows you to grow into it more. But the scenario would be is if you have to look for a trade that offers 5 handles based on what you believe is going to happen in the analysis. So that way you only need half of the move. You don't need to go to full target. Now we've taken out that high at 835's candle. We've taken out that high at 4007.5. That right there would be, if it was not what we're trading right now, which is tape reading, we're not even pushing any buttons, that would be a partial for me. And then I would roll my stop just to, which would originate below the mean threshold of that down close candle at 840. My stop would roll to the mean threshold of that candle, which would be approximately, I'm going to just eyeball it, we'll call it 3983.75. That's where my stop would roll from, where it would originate at the low of 3976.25. And we would look for a run above 4020 now, which would be the high of your candle at 08:25. That's time. So at 825's candle, that high, that would be the next draw on liquidity. And I would want to see velocity getting to that high and through it, reaching into 4030. Once it trades above 08:25 candle or 825's candle, that high, you want to have that noted on your chart also, like draw a little line segment across it. That would be 4019.75. And you want to screen capture all of this as I'm discussing it because it'll be more meaningful to you later on once the day fulfills its, you know, agenda. Now, when I was running up those MT4 accounts on Twitter, when I had the old account on Twitter, and people still like to say that was done with the rented MT4 server, which I don't even know how to do. I don't do that, and I could swear in a court, and there ain't nothing like they can't say anything when I'm calling it live, when I'm outlining it live. Anything that can be seen on a 15-second or 30-second chart can be traded on what I just showed you here. You have to have the next draw on liquidity. And there's so many intraday movements that will create these opportunities for price to fluctuate and move from one point to the next. I was running up each trade, putting on 4 to 5%, not many of them at 5%, but usually they were 4%, 4.5% on each new position. So when I was pyramiding the trades, that's a lot. So you imagine how many times have you seen me pyramid in the same trade? A lot. So if each new pyramid position was being scaled in, risking it in itself for up to 4.5 averaging percent each time, over time, how many times have you seen me doing these things very precisely? Weeks and months, and now years for some of you that are in private group. Long story short, it doesn't take long to build it up and parlay it up. But to someone else on the outside looking at it, it's easy to say, oh, this is fraud. It's not fraud. It's just me sitting there proving a point over and over again, because there's a lot of people out there that will just show you an MT4 list of what they made in their Forex trades and then show rented cars and here, buy my course and do this and do that. And I was trolling an individual back then, doing all that stuff. But you can't argue when someone's sitting in front of you outlining why it should do what it should do, calling it beforehand, and then executing on the logic, working inside of a 1 minute chart where time doesn't even allow you the benefit of being able to do anything else but that. So I would want to see this candle here expand beyond 4,018 on ES. So your present candle right now should make a run higher than the high formed at 08:25 or the 825 candle. I would prefer to see this candle close like it is, and then have the candle at, and again, we're all still on a 5 minute chart right now. Yes, you're 850, okay, 808:50 time candle. That I would prefer to see that be formed as a fair value gap. So in other words, this candle should close not going any lower than the low it's already formed, once we got several seconds of left before it closes. And I would like to see that gap stay just like it is. I wouldn't want to see it close in. That would act as a breakaway gap in my mind, sending us into 40-30, and we'd start looking for 40-50 as a potential upside objective as well. So far, the high hasn't been taken out at 825's candle, but we do have our gap in place. So you want to draw a rectangle from the high of the candle at 845 on your 5 minute chart and draw up to the low of the 855 time candle, and then drag that rectangle to the right all the way to, say, 10 o'clock in the morning. Not that I think it would require that much time, but just to prevent the need for me to make any more mention of it. And I would like to see that stay open. Now, can it revisit the low of 855's candle on the 5 minute chart of ES, or even your US 500 chart? It can do that. And if it just dips below it, I would expect it just to go below the low a little bit and then ramp higher above 40.20. That would be my expectation if it was to do that. And that would be my institutional order flow entry drill. That would be an entry model based with what I'm saying here and what I'm thinking is likely to occur. And please do not take this as a trade. You shouldn't be in something right now. And I know some of you probably are not listening. And if I'm dead wrong, you got it. Okay, you got what you deserve, because I've already warned you, because this is me just reading it real time with you. I am not in a trade. I'm not in anything. Okay, I'm just reading it aloud as we're watching it paint. On a live stream on YouTube, there's going to be a slight delay. I don't think there's that much of a delay as much with this versus what YouTube will be. So you're literally watching it live. So I want to see this pop through, make a higher high on the day. On cleaner days, it'll be more entertaining for me to call the market because you'll see a lot more reaction, more instant gratification to what we're looking for as price signatures. But right here, this is one of the most difficult elements to be, calling it live, or even engaging it. So if you're looking at this and not understanding much at all, that's normal because I'm still trying to get a better read on it. This is typical where you have an old high. It'll just consolidate and fancy dance around. Now, because we have that fair value gap formed based on the 850 time candle on a 5-minute chart, I would not want to see price go below the low of that. That low specifically is the price formed on the high of the candle at 845. Okay, so you want to have a line on that. I don't have this in my charts. This is how my mind is processing it. Obviously, if I had a line on everything I'm outlining here, the chart would be so busy, it would be a mess. It look like an algo box chart, and you don't want that. Yeah. So we don't want that low or that fair value gap to be taken out. So everything should stay bullish as long as the low of that fair value gap at 39.97 and a quarter stays intact. If that gives up the ghost, in other words, if it breaks through it and leaves it, goes below it and trades away from it, not just dips below it, it needs to trade through it and below it, then and only then would I change my mind about where I think the market's going to go. And then I would change my mind to looking for the low formed at 830, which I don't subscribe to at the moment. So we're presently looking for a run rate above, in which we got it now. That screenshot that. That would be a partial. That right there is exactly what you would be taking on a day like this. You want to be taking at least 75% of the trade off. And you would leave a small portion on to see if it can run to 40-30. And then stop would be rolled to break even. So you've taken two partials out, theoretically, and you can take it over to social media, post it, and I'll say you cherry picked it too. Oh, I'm going to have so much fun. So much crow. All right, let's take a look at. Now let's play devil's advocate for a moment. Say this thing is to continue higher. I don't know if it is. Okay, we haven't even got to 930 yet. If it were to continue higher, the next two levels I'm interested in is 4030 for ES and then 4038.75. So you want to have those on your charts now. I'm doing that as I'm talking to you. So 4030 even. And then another one. And I use the little horizontal ray where it's just a line going to the right from wherever I drop it. Okay, and then on US 500, the equivalent would be, bear with me a second, I didn't forget you. For US 500, if it were to continue, I like the levels 4014.2 and 4029 even. Okay, so our attention goes back to that candle at 850. Okay, so regardless of whether you're following along on US 500 for the CFD traders that can't trade the US futures market or don't have real-time data, uh, the same thing applies. The time candle on 5-minute basis, so your chart should be at interval of 5 minutes per candle, and the 850 time candle. Okay, that candle is the fair value gap. The candle prior to it at 845 time-wise, that high comes in at 3997.25. We do not want to see that level breached, and we don't want to see it go down below that. If it does, that changes everything, and it puts us on standby mode, and I would expect it to show willingness to want to go lower after that. Can it dip into the low of the candle formed at 855 in time? Yes, it can do that and still go higher. That's not a problem. It's just preferred that we do not see that. And right about now, if you were in a trade, you'd be thanking yourself for taking partials, because there's a lot of clowns out there that'll tell you partials are stupid. Partials is how you get paid. Until you collapse your profitable trade in some capacity, whether it be part of it, half of it, or all of it, a trade open with profits is not profitable until you realize the gain. Actually, that means you have to close it. So listening to people that talk like that is nonsensical. And the whole point of you doing this is to make money. And if you can't make money and bank something, what are you doing? The levels I gave out earlier were just, just the experience factor, because it's too hard of a read right now. There's nothing logical to base anything on, because it's just a choppy little range that hasn't been productive in many ways, haven't done much at all. It caused harm to anyone that was long already, though. So theoretically, you would have two partials in the bank today, and your stop loss would be essentially at the opening price on the 850 candle. So if it trades at that point, we would call that a stop out on the balance. And you would just move to the sidelines and wait for a new setup. Or do nothing because you've made something and it's CPI. Not that you're trading CPI. I'm not saying that this is you should be trading it. I'm just saying from an experience point, like right there, what it's just done, that dipping below the low of the 855 candle, if it's going to go higher, it shouldn't go much lower than it is right now, and it should start to go higher from here. If it breaks the low of the fair value gap, which is the very high of your candle at 845, near-term bullishness for me would be moved to the sidelines. I would move neutral. So I wouldn't be bullish or bearish. I would be watching how we trade below the low of the candle's high at 845. I just realized something. I'm not sure if I took this off mute. It looks like it's still going. Can you do me a favor and tweet to me if you can hear me? Can you hear me? Thank you, Budu. Thank you, Jake. You're welcome. All right, so we're not quite in the middle of that fair value gap that's formed on the 5-minute chart based on the 850 candle. About halfway through that's consequent encroachment. I would not want to see that breached. It can go just a little bit deeper. Preferably, it shouldn't. But I'd like to see it turn from here and start to build more bullish candles and then try to run through the high formed on the 9 o'clock candle. We still got more than 15 minutes or so before the opening bell at 9:30. So a lot of things can change and shift and gyrate between now and then. And what small, little, modest, study-based bias I have here can unravel quickly. So I want you on your 5-minute chart, whether you're using the US 500 to follow along or if you're using the ES live, grab your rectangle tool and take it up to a point at which where it says 4015 even, or just find any location on your chart and then drag it down to the equivalent of 5 handles. And I want you to think about how that is it. That's the range of what you're trying to accomplish. As a starting point, as a low hanging fruit, first rung objective as a student of mine, you're looking for just that. And look how much we've moved around already so far on a day that's very difficult to read. Very, very difficult to read. And you've been witness to me walking through, and we're hitting the bottom of that fair value gap now. So you want to watch and see, does it support it, or is it just rip right through it and show no respect? Be mindful you should have a line segment drawn from the 850 candles opening price, that being 3993.75. That would be the hypothetical stop loss. That would be breaker even for me with 2 partials banked. And then if it hits that level, then we would be neutral. We would go to the side and wait. Now, if this was Forex, you'd already be stopped out. This is the way it is. It's wild in that because you're trading in, your broker's liquidity pool. No, you're not ICT. You don't know what you're talking about. Mm-hmm. And stopped. Okay. So now log that, screenshot that. Okay. So you've seen a run that offered an opportunity to move from a low of 39.92 and a half all the way up to a high of 40.21 and a half. Okay. So look at the range I told you to draw out with a rectangle is 5 handles, 5 points. Okay. So that would be like drawing from on your ES chart would be 40, 15, 4015. Drag the rectangle down to 400. I'm sorry, 4010. So it's 5 handles. Okay. That small little box, that's what your eye's looking for fluctuations to capitalize on. That's it. That's the smallest threshold objective that you need to concern yourself with if you're brand new. Because those 5 handles, if you're trading with one mini, that's $250. Some of you probably listening aren't even making $250 a day. But that one movement, that can change your whole life because that's the first building block of being able to be consistently profitable, finding something that repeats over and over and over again. Okay, so price has gone down into the candle at 840 that we outlined as our initial ideal order block. Okay, see how it's moved away from that fair value gap after touching the bottom of it? On the present candle we're in right now, it traded right back up from its opening, bumped the low of the fair value gap, and then expanded down lower. See, that's a signature that would, as I was stopped out, if I watched that occur, I would feel better about the idea that I got stopped out instead of just thinking like a typical trader would be, oh, I got stopped out and be frustrated. I'd be thankful that the stop did its job. I paid that stop, hypothetically, to do its job to prevent me from losing more. And it's a paradigm shift that you're going to have as a trader, because right now, if you're new, you're thinking, I don't want to use a stop loss because that guarantees I'm going to take a loss. When a professional mindset is, I am going to lose. It's going to happen. So I have to limit that loss responsibly. And I have to have a mechanism, a shield in my repertoire that protects me from having excessive loss. And it's difficult to grasp that when you're new, because the first priority for you is, I want to lose money. Well, that's answered rather quickly and easily by just simply not trading before you know how to trade. So you won't need to worry about the stop loss yet because you haven't even learned how to trade or read price yet. So you're placing so much concern and fear and anxiety on an element of the essential factors of consistently profitable trading, which is money management and risk management and the implementation of a stop loss. That goes without saying that that's important, but it's not important for you right now because you have to be able to know what the market's doing before you put a trade on. Can you really read what price is doing? So far, we've respected the opening price on that order block at 840, and we're back into the low of the fair value gap that was formed on the candle at 850. Still on a 5-minute chart on ES. Nothing terrible here yet. Nothing, nothing that exciting, but let's just say we were not in CPI conditions. I would already be going long and looking for a run above the relative equal highs at 40.20, just based on this. Because I would view, I'm not saying don't take that as a trade, okay, but I would, in other instances, I would view that as such, because I would view the 830 drop down as a Judas swing to get people offside, trap them thinking it's going to go lower, and upset all the liquidity below the lows. If you scroll back on your chart, whether it be on the 15 or if you want to go up to a higher time frame, 5-minute or 15-minute chart, to the left, you can see that drop down at 830, whether you're using US 500 or ES Live, it cleared up all the sell stops that were trailed below recent advancements into the 4018 before the 830 news came out. So I view that drop at 830 as a fake move, and then the retracement down into that 840 candle being a bullish order block. And then I would watch and see, does it have the energy to go through that fair value gap formed at the 910 level? Okay, so your 910 time candle on the 5-minute chart, that's a fair value gap. But I'm not going to annotate that. I'm using the same rectangle that's on the fair value gap that I outlined and talked you through at 850's candle. I know some of you that are brand new, you're completely lost right now. That's okay. Trust me, you'll be able to go through this later on and see exactly what I'm talking about. But you should make it easier. I will when we're doing live streams on YouTube right now. I'm keeping myself close to the marketplace. That way I'm not rusty doing it live in front of you. Does it want to expand higher quickly too on this candle or the very next candle, preferably this one here? I'd like to see it really aggressively run up and take out the low of the candle at 855. That would be going through the full fair value gap that was formed on the 850 time 5-minute candle. So that big green candle at 850, I'm watching to see if the present candle that we're forming on a 5-minute chart, does it have the energy and the momentum to carry us all the way through the gap that's been formed? Because if you look at what's going on here, we have a candle at 910 on a 5-minute chart on ES or US 500. We have a candle at 910 and then the candle at 850. Both of those candles are one single pass. The 850 candle is a one single pass up. Then we have one single pass going down at 910. So that being a potential to be a balanced price range. If it rejects this and can't climb through it, and if it stifles any movement higher, that really increases the likelihood of us running down to the lows that were formed on 830. So quickly you can see how there's a whole lot of this type of balancing and measuring and seeing what you should be doing. And that's why it's very challenging as a developing student, because you don't even know what you're supposed to be considering as important. You're just looking for, give me an order block or a fair value gap to trade on. There's so many things that has to be weighed out and decided. And that's why I have a great deal of respect for people that live stream, because not only are they doing all those things that make up the decision process of following their model, whatever it is, they also have to know that the outcome of whatever they're doing is going to be judged harshly, even by the folks that supposedly support them. They know in their heart of hearts that that's going to be impactful to them because they look at you as a hero. Okay. And here I am. I'm not trying to be a hero. I'm just teaching you how to read price. So far, we're about halfway in to that gap. So using the order block at 840 and targeting the top of the fair value gap that was formed at the 850 candle, that would be a very low hanging fruit objective for a beginning trader, paper trading, or not even paper trading, but like tape reading. So if it were to touch the top of the fair value gap or the low of the very specific candle at 855 time, you want to screenshot that, and that's more than 5 handles. That's plenty to do well as a beginning student. And you're just watching how price gravitates from one level to the next, expecting it to do certain things and behave a certain way, and certain things not manifest itself in price. Now, we don't want to see a trade below and through with the energy, like a lot of excitement below 39.97 and a quarter, or the high formed on the 915 candle. Everything's still on a 5-minute chart. That's like it's talking. Feed me ICT. All right, 2.5 minutes to the opening bell at 9:30. Give me that pen, son. No, the next one over there. Yeah. So far, we're just consolidating inside that fair value gap, a 50s candle and a at 9/10s candle. So if it moves energetically below 39.97 and a quarter and goes back into that order block that was formed and we've been monitoring at 8:40s down close candle, that would indicate that we're inside of a balanced price range, and then we could use that information going into 9:30. So far, we've not shown any kind of energetic move below 39.97 and a quarter. It's just retested it and we're back in the middle of the gap. But all things being equal, and this assume that this is not a CPI number day. Okay, we're not in that climate, if you will. The outline that we're looking at here, that would have been a long entry for me at the order block dropping down, and I would look for a run above 40.20, accelerating into 40.30. That's what I would look for. But because we're not in that, we're in CPI data release and the 9:30 is opening in less than 11 seconds, we have to just paper or tape read it. I have not pushed the button. I promise you're not going to get a dose. This is the dose. Very, very difficult read. Okay, another touch of the 39.97 and a quarter, below the fair value gap, which is the high of the candle at 8:45 candle. Notice there's a lack of an energy right now. Usually when we have the opening bell, it's a lot of a rush to do something, a lot of volatility. We're not seeing that yet. Okay, leaving the fair value gap and took out the low of the 9.25 candle. Still would like to see it expand aggressively higher. So the question is when you're looking at this as a new student or someone that's maybe a break-even trader and you're just looking for a way to determine when the market looks like it's going to do something, like what is a market that's poised to do something with a high degree of probability? You're not seeing that here today. Okay, and that's one of the benefits of being in an environment like this, being, I guess, coached through it, because there's so many factors that would otherwise lead to you losing money by not knowing this, by not being able to recognize, choppy, uncertain conditions. All right, we came back down into the high of the candle at 8:40. So 8:40's candle, time-wise, we're trading into that again. All right, so we have evidence that that's a balanced price range now at the range that we've outlined as a fair value gap. So your attention should turn to the low that's just been taken out at 915. Okay, we're going to treat that as a potential short-term shift in market structure. And I'm drawing a line out from that to the right. That's usually that orange line. I usually put like the little light bulb icon on my chart. And I'm dropping down into a 1-minute chart now. So you should have a line drawn from the right on the 918 low. And we're bouncing up into what could potentially be a fair value gap formed on the candle at 932 on a 1-minute chart. We've just stabbed up into it. And you should have your level drawn at the 830 low. That price should be, for ES, it should be 39.54 even. Okay, and then you would hypothetically in your mind say, okay, we're inside, we went up into the high of the 933 candle. That would be enough by poking into that. That's enough for a short. You want to watch, does it gravitate with a lot of energy to get below the 844 low and the 840 low? That would be first potential profit or partial. That's how you would look at it like that. I have not pushed the button. there's no trade. I'm not going to do any trades today. Okay, if I trade anything, it'll be in the PM session. Tape reading this, you want to have the little trend line segment. Draw a trend line from the high of your 933 candle. Drag that out to the right. Okay, and you can see how we went up into that high just by a little bit on the 934 time candle. And then we're all on a 1-minute chart right now. You're not trying to place a trade. You don't need to worry about a stop right now. All you're doing is you're reading it. Does it show these signatures? Does it want to move and gyrate? You're all thinking, okay, if that's an entry, where will my stop loss be? It's not a trade. I'm teaching you how to read the tape. Until you can start doing this, you can't figure out where to put a stop loss. You won't be able to go in the right way. You won't be able to know what the market's going to do. There's stages in this development. You have to go through the right process. Every single one of my failed students, every single one of them do the same thing over and over again. They rush to try to get into a trade. They want to make money right away, and they're not prepared to do it. They haven't properly learned how to trust what it is that you're going to be trying to put money behind. Get your screen capture ready. I don't want to see the open on the candle at 935 be breached. Okay, that small little up candle. It can retouch that or retrade back up into it. But I want to see it preferably leave a small little gap on the candle that was formed at 936. Between the candle at 935 and the present candle we're in right now, I want to see that small little area stay open. It can trade back up there. It's fine. But I'd prefer to see a small piece left open and then go down below the low at 840. But we have now traded back up to that up close candle. Very, very small, shallow sell side liquidity pool resting below the low at 840. I want to see now this candle with the very next candle, real sudden drop below it. And if it does that, you want to screen capture it as it does that. Remember I was saying you weren't ready to take a trade? Some of you are like, I'm glad I didn't take a trade. Now you want to take your rectangle and from the low on the 931 candle to the 933 candle, drag that rectangle out in time. Drag it out to like 950 time wise. Okay. Price could go back up into that. Okay. Which is the reason why I didn't discuss anything about a stop loss, because you can go in and use the high on the 933 candle as your entry. On the 934 candle, when it poked above 933's high, that's an institutional order flow entry drill. 5 handles were offered on that run lower, and it need not do what? It need not go to the low at 840. But notice what it did reach below. Look at the closing price at 844. Just for a moment, you're not going to keep this on there, but just for a moment, drag the line I told you to anchor from 840's low, drag that little horizontal ray or trend line or whatever you want to use it, drag it up to the closing price at 844. That's a rejection block. So does it offer from running out the high on the 933 high on a 1 minute chart? It runs above it, and then that would be your short. Does it offer 5 handles to get down to that rejection block? Because that would be your next discount array. Yes, it's done it beautifully. And it didn't need to take out the wick low at 840. And now what is the price doing? It's just meandering around between the rejection block and the low formed at 918. So we would prefer to see it expand once more and aggressively attack the liquidity resting below the 844 low. So put your line back on that 844 low. We want to see that. If it were to trade back up into the fair value gap that is outlined for you based on the 932 candle, I would use that as a totally new partial going into the idea that we could still run the 39.76 and a quarters low. All right, so now watch how this next candle should be popping lower. Five handles, folks. I know it sounds like that's not sexy, ICT. I'm going to do 100 handles like you do. I started like this. I started just like this. Small little incremental moves. And they build. And you start seeing more 5 handle moves. And then they become 10. And there you go. Screenshot that. Another cherry pick. Picking cherries, real time. Be sure to tip your waitress. I'll be here all week. And that's it. You'd move to the sidelines and you're done. You had several handles offered to you in tape reading, outlined it real time with you, walked you through it, every single individual candle. Okay. No yin and yang symbols needed. Okay. None of the nonsense. It's real time algorithmic price delivery. That's all it is. Now, this is a sloppy day. This is very, very hard. On a difficulty scale of 1 to 100, we're at like 90. It's very hard to read this right now for me. So if I'm telling you this is hard and you can't really see the benefit of anything in price action right now, you're okay. That's fine. That's how you should feel about it. All right. Now you want to take your attention to the low at 8:30. We don't want to see that range that was identified by me moments ago, the 932 candle, that fair value gap. We don't want to see that return to now. We want to treat that as a breakaway gap. And now, because we're well below the, what is this here? The 840 low on your 1 minute chart, you want to see it expand down to the rejection block, which is the closing price at the 830 candle. And that's going to be way different for US 500. And just for you guys, just use the low of 830. Okay. But for ES, the specific level is 39.67 and a quarter. We want to see it reach below that. And that would be another partial. 80% of your trade should be off at that point. I know some of you are not listening and you're in trades right now and you're flipping out because you're making money and you can't handle it. I told you not to do it. It's worse than crack. Not that I have experience with crack, but yeah. Oh, ICT. All right. As soon as it cracks 39.67 and a quarter, you want to have that screenshot. You should have it typed out already on your chart. 80% comes off below that line. And then when you screen capture it, it'll be in your screen capture as it happens. And it's just really nice to have that on the weekend, looking back saying, I watched this live. I watched it really pan out right there. It was really happening in front of me. This stuff works. It's crazy. You know, it gets boring that after a while. I get excited because I see all of you get, energized by it. Oops, there's that luck again. Now, your wick for ES traders, you want to take your Fibonacci and measure an anchor from the low on the 830 candle up to the closing price. That comes to 39.60 and 3/4. You want to have a line on your chart at that price. 39.60 and 3/4. You would take a partial below that and then let the rest run and see if it can take out the low at 39.54 even, or whatever your low is in US 500. Oh, it's so much different when you're doing it live, ICT. Haters are flipping out right now. He'll never do this. Yeah, wait till you see what I'm doing the rest of this year. It's closing time. Ain't nobody selling mentorships this year. Now think about what sweet spot you would be in right now. You've had two partials going long, you got stopped out with the bounce, no big deal. We waited for 9:30. We waited for it to indicate what it wanted to do. We watched a very specific level. Does it act as a balanced price range? And it gave us our signature. Then we saw another imbalance and a shift in market structure where I showed you the line where it went below it. I mapped out where the imbalance would be. If it traded up into that, would be using it as an entry that was on the candle at 934. Okay. One of the things that you're going to have to learn to just submit to is the process of time being in a trade. It's altogether something different. Like when you watch my recordings and I'm executing, it's entertaining. It's great. Sometimes I use great music. Sometimes it's probably not your genre. It's fine. It's just for me, not for you. But that element of watching how fast it goes to the targets and where I'm peeling off profit partials, that unfortunately can trick you into thinking that that's how fast it should feel for you in a trade. And that was one of the worst growing pains for me as a trader, because being in a profitable trade and I haven't taken anything out, that feels like forever if I'm just holding for my terminus target, my ultimate target. In this case would be the low of the day at 8:30. This point here, we're trading at a level where 80% of the trade's already off, hypothetically. So you're in profit 80%. It doesn't matter. Okay. Listen, write this down in your journal. It does not even matter if 8:30 low is taken out or not. See, that transaction is about being right. Right is not profitable. Profitable is profitable. So we're looking for ways to take things out of the marketplace where it makes sense to do so, where there is liquidity, where there's a reason for the market to be repriced to. What's the basis for price even going to these levels? That's what I walked you through this morning. That was the narrative. You're not seeing that with other people out there. You're just seeing them show you results on an MT4, or they're doing lots of trades and going to full max loss and not using stop losses. So there is a degree of mastery that you will grow into, but you start here and you do this for weeks and months. And then you learn how you're going to interpret price. How has it felt for you to watch this? As it was melting down, respecting the levels I'm calling out and showing you very minute candles, telling you what it should do, what it should not do. How did that feel watching that? Did you feel anxious? Did you feel comforted because I'm talking about it? Did you want to fade it? I guarantee you trolls are out there trying to do the opposite because they were hoping I was doing it wrong. So they can go, look what ICT did today, but I did the opposite. You got your ass wrecked today. But feelings watching this real time, you have to really pay attention to that. In your journal, you should be doing the most of that today. So after we close our session, you want to go to your journal while it's fresh in your mind. What did you feel? And be honest with yourself. This is the moment where you have to be honest with the observations of you as a trader, feeling what it felt like to watch the price deliver algorithmically, not retail logic. Nothing in this is retail. There was nothing in here from Chris Laurie, nothing supply and demand, nothing Elliott Wave, nothing like that, nothing harmonic. It's just simple algorithmic time and price. You want to screenshot this right now. There you go. So now you would only have less than 10%, maybe 10% of your original position short from 934. So it's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It's been 16 minutes and you made more than you earned in your job's weekly salary if you've been working with one contract. Now, I'm taking a great deal of liberty because most people don't make that much money in the United States. And I know some of you are probably doing some high dollar stuff, but you should be 90% out of your trade. And at a point where the stop would roll to, I would hypothetically have my stop at 39.72 and a half. Why that? Because it's just above the fair value gap that's formed at the 944 candle. So it would be above that. And if it comes back and stops me, that's fine. I wouldn't want to be in it any longer. So many people falling in love today. I don't know where this guy came from, but I love him. I love him. Oh, I got so much stuff this year. You have no idea where I'm taking you this year. I'm actually falling in love with live streaming. Might start doing it every day. Shut everybody down. Do it, ICT. Do it. All right, now think about what you feel right now. If you had 90% off on your trade, 90% off, how would you feel about that retracement so far? You don't give a shit because you're banked 90% and you're not basing your trading on the transaction of being right or wrong. Right or wrong has no basis for profitability. None, has absolutely nothing to do with it. Now, draw out your rectangle on the candle at 944. You're going to go to the 943 candles low, drag it to the 945 candles high. Okay, and then drag that out in time. I'm watching that level there. It should not go above that. If it does, we're done for the morning. So I would roll my stop to Come on, this thing. I'm holding the phone in my hand and I'm trying to drag my finger across my laptops. I don't have a mouse on this. I use everything on a laptop in case someone hacks or tries to do something while I'm connected to the accounts that I don't trade with my live account. Everything through TradingView. When I'm sharing it with you, it's all through a laptop. I would have my stop at 39.69 and a half. So if it went there, I'd be content with being knocked out there and it's fine. I don't care. And you shouldn't care either if you were in a trade, but I would want to see it, drop lower from here because we already had that candle return back to that fair value gap. But this mapped out for you at 951. And you want to have 100% of your trade off if it goes below the 830 low, and don't care how much it goes beyond that. You don't care because all of your uh, fear, anxiety, performance issues are all going to come initially with being right or wrong. And I'm trying to train you not to think like that. Okay. Don't think that way. You got to find a way to get in here, find a position to go in that has a measurable risk that's palatable for you. What does that mean? Can you take that trade? Can you afford to be in that trade based on the amount of movement that it could potentially put you through? And some trades are not going to be feasible for some of you. There's some trades that I won't even take because it doesn't make sense to do it. I'll just wait for something else. All the liquidity resting below that low right now is flashing like a neon sign. Come down here. I want to sell to you. I'll sell it to you below the low at 830 at 39.54. Below there, there's real orders below that. Now you want to take that up candle at 951. Okay. At 951, I'm watching the middle of that candle. That's mean threshold. In my mind, I'm watching that thinking, I don't want to see price go above that. I want to see everything that it prints. I want to see it stay below the middle of that candle. We'll just call it roughly 39.63 even. I'm not rolling my stop to that. I'm just watching it. Does it want to go back to that and throw it? If it does, if it trades like through 39.63, then I would at that point save my stop loss and close the trade and be content with it, not worrying about whether I got right or wrong about going below that low. But as long as it stays below that 951 candles middle point, then I would look at this as it's still likely to take out the sell side liquidity below 830's low, and I'd be content with holding it. But a run through, like it tries to run through 39.63 or the middle of the 951 time candle on a 1 minute chart, you're watching it. If it were to do that, then I would collapse the trade and save my stop loss and not worry about anything and just go home. Not regret if it just tanks. It could drop to 3,100 even after that. That's it. I would close the trade right there. I would collapse it. And I would not care at all whether it goes to hell or if it rips higher, where do I stop? Because I wouldn't be in the market now. I'd be done. Now think. Take a moment for a second. I'm not going to say anything. I want you to just think about what you just watched. Was that real enough for you? Was that real enough for you? Every single candle, every single one of them, outlining why it should do this or that, what it shouldn't do. If it was hard for you to follow along, I know it'll be easier when you're watching me with a chart. But understand that everything that I do is perfectly calculated. There's a measurement behind everything I'm doing. There's a process. Okay. There's no safety net out here. I don't know how many people are listening to me and how many people are going to watch this later on, but I can't edit this and I can't paint those candles on your chart. That happens from the market. But you just had the entire morning session outlined to you. What I would do, what I would not want to see happen, how I would engage, where my stop loss would be, where would my partials be. It's exactly what you watch me execute on through TradingView with live data. That's not cherry picked. As much as these assholes want it to be, it's not. And I'm going to be breaking all kinds of hearts all year long. I hope you're here for it. I hope you're here for it because I have such amazing shit to share with you all for free. No mentorship, so no join my bullshit. Okay. Here's my stop loss getting ready to get the hit. And if it does, you'll see me say to you, this is why I would have done it. And I would be thankful that I've done what? Saved the stop, kept more of the profit, and not worry about it. It returned right back up into that fair value gap I gave at the 944. Done. Right there. That would be it. I'd be done. If I would have had the stop loss, I would have been stopped out there and gave up profit. Now, if you know with logic when you're likely to get stopped out and still be able to bank open profits still that are not realized yet, doesn't it make sense for you to say, okay, well, why would I just let it stop me out? That's experience. That's somebody that knows what the fuck they're doing. Okay. And there's no other way about it. Now, you can look at what I'm doing today. Anybody else would have done this. They'd be out there parading it on social media, beating their chest. I'm just telling you, use some fucking common sense, folks. If I don't know what I'm talking about, it would not be like this. Okay. It wouldn't be like this. So if you've been on the fence about, oh, does he really know how to do this? Or do these concepts really work? Or can you time the market? Can you read price? Can you do this? Can you do that? Man, if this doesn't communicate it to you, nothing will. My live streams won't. It just means that you aren't prepared to learn. That's it. Or you're a competitor and you're just hating life right now. And that's fine. That's okay. But I want you to know that there's a process that you're going to have to go through. And it's going to be longer than you want it to be. It's going to take you longer to get this because you have all this baggage you're bringing to it. Oh, but I heard this guy say about SMC concepts or ICT's a fraud. He used to deliver pizza. Fraud this. I can do this every fucking day, every single day. I can do it right in front of the CFTC. Yes, I can. I ain't worried about none of that shit. I ain't worried about none of it. If I couldn't do this, I sure as hell wouldn't be out here doing it. I wouldn't be inviting you all to watch me fall on my face. Think. If I didn't know for certain that I knew what these candlesticks were going to do likely next before they do it, you think I would be out here doing this? Hell no. Nobody would. Nobody would. But everything else in the retail version of trading has perfect excuses when their trade fails. Oh, well, my harmonic shark, my bat, this and that and the other thing didn't work today. Okay, whatever. I don't have any of that shit to worry about. I'm looking for where the orders are. What time is it? What's it likely to reach for? When will it likely fail? That's it. There's 4 things that you need to know with me, okay? 4. Are we going up or down? What's the bias, okay? Are we going up or down? If we're going up, we're only going to go up to take out an old high, or we're going to go up into an imbalance that it left a fair value gap above market price. That is it. That's it. Flip it now. If it's going down, it's going to go below an old low, or it's going to go down below market price to a fair value gap where there's an inefficiency. Now think about that. Isn't that fucking easy compared to which harmonic pattern are you going to look for? Elliott wave count. Come on. That shit's subjective. It's subjective. Your low on your chart is not gyrating and moving around and morphing into something else. It's there. It's sitting there. And time is marching forward continuously. We know that there's going to be a great deal of excitement in the marketplace to do certain things at the opening price or opening range at 9:30 and at 8:30 when news drivers come out. And you have to be able to frame a narrative, which is kind of like what I fleshed out with you. That's the hard part. That comes with experience. I cannot, listen to me, okay? And if you're all waiting for my books, just know this before you even or start chomping at the bit to buy it. I'm not going to be able to take 3 decades of experience and being able to map out narrative based on real-time data, looking at 1-minute charts. I can't find a way to do this easy for you to just read a paragraph or a chapter, and this is how you do it. That's why I'm doing what I'm doing this year with you live. Because only by seeing it done outlining what I'm looking for. What factors am I mentioning? Anything that I did not mention has no fucking basis on anything today. Unless I talked about it, there was no reach for me to do it. There's no need for me to talk about any of the other things that you think I should be talking about. Trader's Trinity. What about the Judas swing? And how about the Asian range? And how many standard deviations? Forget all that. I didn't use any of that for what I just did. I just read price. That's all I did. Very simple inefficiencies, draws on liquidity, time. That's it. That's it. Now, is that not easy? I'm not saying it's easy for you to replicate what I just did. I'm not saying that. But what I just showed you, is that not easy compared to everything else that you probably looked at and dabbled in? There's all kinds of supposed bullshit that makes us money. Indicators. What indicator did you see me use here? Open, high, low, and close. And the clock. What time is it? I only talked about rectangles being on the chart to identify it with you real time so that way you can see it visually in your chart. Does this price respect that level? Does it gyrate and reach to the level I'm talking about next? And you have to feel what it feels like to watch it do that. Because it's not going to be immediate. It's not going to be, oh, I'm in the trade, so it better deliver fast because I'm uncomfortable. The market doesn't owe you comfort. It doesn't owe you money. You're not supposed to be able to do this, folks. As much as it feels like this is the playground for everybody to join and have fun. It's all membership. We just got to pay our dues to the broker and we can all get rich. That's not how this works, man. That's not how this works. This is hard. It's war. It is war because you're battling not only yourself, because you're going to talk yourself out of going out in that battlefield every day, unless you know how to do this. And how do you know how to do it? You go through the process that's boring. You read price without pushing a button. And you think to yourself, okay, if I were in a trade right now, where would the risk be? Where would my profit potential be? Where's my partials going to be? You have to know them before they go there. Otherwise, you're doing what? You're reacting. You'll chase price with no real reason for being in it. And then any small little fluctuation. Every time we had a small little retracement, did you hear me freak out? No. But when it was potentially going to reverse, I gave you a mindset that, okay, if it does this, then I would collapse the trade and save my stop loss. Real boring, monotone ICT. Not amped up, not heart palpitations and heavy breathing and fast. Oh, I hope. You hear me say anytime, I hope it doesn't turn around. Please don't turn on me. Please don't wreck me. That's a sign and a testimony of somebody that has no idea what the fuck they're doing. And if that bothers you, if that offends you, I'm sorry. Okay. I'm not trying to offend you, but I'm trying to shake you by the lapels and tell you, listen, okay, you have 1 year left with me. 1 year. I'm not going to do this again. If you've been on the fence with trying to learn what it is I teach or taught rather, and what I teach presently, all you have to do is show up. It cost you nothing but the time to be here this morning. But I guarantee you, nobody else on live streams did what you just saw me do. Nobody told you what was going to happen, why it was going to happen, when it was going to happen, and how it was going to do it. And I did not learn this from Chris Laurie. I did not learn this from Larry Williams. I did not learn this from anybody else out there. And that's not beating my chest. I'm just telling you for the last fucking time, there is nobody that taught me this. I am of the character that, hey, if they did, I'd say that person taught me. Linda Rasch, okay? She's on Twitter. She doesn't have a big following. She should have a bigger following. She was a mentor to me. She gave me the foundational points about understanding where stops are. It didn't make sense to me. It didn't make sense to me. And she was the very person and trader that pit me against my original mentor, Larry Williams, because Larry Williams said, there is no them against you. Though those guys got us guys. They stopped us out. Motherfucker, listen, I love you, Larry. I do. I love you to death. But you're wrong. You're wrong. And Linda Rasch was the one that I read in her Street Smarts books, or Street Smart book, rather. Her and Larry Connors wrote that book. If you don't have that book, you should get it. Okay. I don't get a kickback. She don't even know me probably. Bottom line is that book has these little snapshot setups. Okay. That a new trader can find, I found it very useful because it gave me a snapshot of what it is I should be looking for. A single low stop hunt or a double low. Those things can be hunted. Well, even in her book, she's not targeting that. But when I saw that, I'm thinking to myself, well, fuck, if I'm getting stopped out, there's somebody who can see that. Now I can see it as a potential bullseye. Well, I'm going to be the archer. I'm going to shoot that shit. And then once I adopt that mindset, everything started to unfold like the veil lifted. I'm like, oh shit. I'm looking for entry patterns when I'm supposed to be looking for where's the market going to go for and why should it go there? It's going to hurt somebody. This market, you think it's your best friend. Oh, I love the market. This market is a cruel lover. And if you don't give it everything, oh, you think a scorned woman has no measure in terms of wrath. This shit will end you. You have to give it everything, all your attention, all your attention. Even on days that the markets aren't moving, you have to do that because it demands it. Lazy asses are not going to be able to survive in this marketplaces, especially now. This is hard market conditions. You see these jokers out there talking to you. Oh, well, it's so easy. I'm smashing. I'm killing it. I'm making $300,000 a day. Raphael Palmdale. I may have his name wrong, but don't get me wrong. I think that's his name. This guy's making $1 million every week. Get the fuck out of here. Okay. These markets are absolutely aggressive. They're choppy. They're very, very uncertain at times. And even for someone like me, that I think I'm above average in terms of being able to read price and trade. I believe that. And I think I communicated enough to show that I'm not average. I'm having a difficult time reading this. Usually it's like cakewalk. I turn the chart on, bang, it's there. It's easy. It's not like that, folks. I demand a whole lot of things now to get me in, like I showed you this morning. Whereas before, we have cleaner markets. It's just real easy. Get in there and bang, bang. And we'll have that. You'll see that this year. And you'll see me get my ass handed to me when I'm wrong. It's going to happen. Okay. I'm going to be out there. I'm actually going to pick days where I have a tendency for that to happen. And you'll hear me go into it. I'll explain it to you. This is a day that's difficult. And I'm going to force myself to view it in front of you so you can see how I get it wrong. I took 2 trades yesterday and I lost on both of them. They're small. I knew that the day was characteristic of me losing. So you saw me do one single contract. That's what it looks like. If I'm looking for something that I'm trying to capitalize on and the market's not predisposed to deliver like I want it to, guess what's going to happen? I'm going to get stopped out. Later on in the day, I smashed it on NASDAQ, killed it, murdered it the last hour, murdered it. So those losses meant nothing. Now to you, as a new student, new trader in development, never been in the marketplace before, first time listening to someone like me, I probably sound like a nutcase, and that's fine. That's good. If you're a trader, you already have a few screws loose anyway, because nobody in their right fucking mind would want to do this. But guess what? You're going to be thankful you did. You are going to be so fucking thankful that you did, because if you learn how to do this, there ain't a job out there that pays like this. You can't find a job that pays like this, Ken. And you write your own checks, but it also takes from you, and you need to be able to know what it feels like to lose occasionally and know that, okay, it ain't going to hurt me long term. It took something from me today, but I'm not done. And that's how you want to be able to think about it. But right now, as a new trader, you're not thinking that at all. You're thinking, I got to avoid losing money. I got to be able to avoid taking a loss. I got to only do it when it's right, because you're thinking like maybe I'm the guy, or there's somebody that's, if it's not me, it's somebody else that's going to be creeping out of the woodwork. They know how to trade without ever taking a loss. I will take losses if I trade in the environments that I know that's likely to create it. And I told you, when I do get a loss, I'll show you. For fuck's sake, you saw 2 of them yesterday. But I'm not in here trying to trade in environments where it's dicey, 50-50. Not every consolidation is an accumulation phase. It's not. It's just fucking chop. It's time distortion. That's what you're experiencing. The algorithm is just marking time. That's it. It's not doing anything. It's waiting. Then it will move. But you can't time that when it enters those phases. You have to wait. And then the market will show you its hand in a time-based chart, not a range chart, not anything other than a time-based chart. If anybody sits down and tells you that they're going to show you something algorithmic and they're doing anything outside of a time-based chart, turn them the fuck off. They're full of shit because they're going to show you a 50-50 hit rate. They're going to get stopped out many times in their trades. They're not going to be accurate, and they're going to be praying while they're doing their live streams and saying, I hope I'm not getting wrecked. You're never going to hear me talk that way. That's never going to happen. I know what I'm looking for. It's black and white, period. End of story. If it's a gray area, I'm not fucking touching it. That's what experience, with the real experience, the real knowledge, a real algorithmic perspective on price action. That's what you get. Not 20 fucking trades, hoping they all pay out, over leveraging when you lose, just so you can come back at the end of the day and made $4,000. No, you didn't. No, you didn't. But I'm here for it. Oh, I'm here for it. And I hope you're here for it too. I want you to know that I have some amazing shit to share with you this year. And I promise you, if you show up every day, even if you don't like this part of the stuff, the rants and stuff, you're going to need these. You're going to need them when you feel like you can't grind on. And the days I'm not going to be live streaming, you're going to want to listen to this shit because it'll keep you fired up. It'll make you remember, oh yeah, this stuff does work, but temporarily while I'm learning, I'm going to not know what I should be doing, and I'm going to study and expect certain things in price action, and it's not going to happen. It doesn't mean it doesn't work. It doesn't mean that I'm not going to be profitable in the future. It means that I have to defer those expectations right now while I'm learning. And that, my friends, is the reality check that all of you need to have. So look at your chart right now because I'm about to close it. I timed how it was likely to not go down below the low, and I said, this is where my stop would be protected. I'm not going to let it take my stop. What caused me to think that? Look at your 1 minute candle at 9:45. You see that low? Draw a little line segment from that low to the right. I'm doing it as I tell you, so that way I know I'm doing it right. And then the low at 9:50, draw a little line segment to the right from that one. And now you'll see at the 9:54 low, how many times did it make a new low? 3 times. Okay. So at 9:45, that low was pierced and traded through to the downside on the 9:49 candle. See that? Then it created the short-term low at 9:50, traded back up to the fair value gap I mapped out for you. And then that low formed at 9:50 was pierced on 9:53. And then at 9:54, I was already giving indications to you. Go back and listen. It's there. Can't edit it. I said, okay, now I'm going to watch and see if that middle of that candle, of what candle? The up candle at 9:51. I said, my eye is watching the middle of that candle. I don't want to see that candle, that midpoint, which is mean threshold. I don't want to see that traded through. If it trades up through that, I'm going to save my stop and hypothetically close it, and it wouldn't get my stop loss. And I don't give a shit if it goes down below and runs out to 830 low. Remember me saying that? You'll hear it in the recording when it's done. I don't post these anywhere. And there's a lot of you out there that are taking them and put them on your YouTube channel, and I don't give a shit. Do what you want with them. But once they're, like, when I'm done, this is being recorded. You can play the recording for, I don't know how long it does last on Twitter, but trust me, it's, people are making archives of these things, and that's fine. I don't care what they do with them, really. But that candle at 9:51, I mentioned that my eye was focused there because we were approaching 10 o'clock. And 10 o'clock, between 9:50 and 10:10, in that 20-minute range, there's a macro that unfolds. Okay, a macro is a short list of instructions that the algorithm will go fire through. And if it's not going to run through the low that we outlined at 8:30, then what is it going to do? It's going to retrace. One of two things, folks. So how do I protect myself if I'm in a hypothetical short position? I've already made a disclosure publicly where my stop would have been. If I see that up close candle midpoint get breached like it does on the 9:55 candle, This is what you everything I'm saying, don't just listen to me. You need to be taking this information and annotating it on your chart. Otherwise, it's just a static chart. It shows, oh, I was there, I watched them do that. That's useless. That's fucking waste of time. You got to take what I'm saying to you here, because you're all going to ask me 2 weeks down the road, how do you know when to save your stop loss? How do you know when to collapse the trade and just close it? I'm showing you right here. But you're not going to do the work of annotating your chart, journaling it, and putting it in there, because that requires what? Effort. And some of you are just fucking lazy. And I have students that paid me that are fucking lazy, and they cry and they say, I can't do this and I can't do that. You have to do these things. It takes work. Look how long we've been together this morning. That's time invested watching something that you didn't make money with, except for the people that didn't short it. I got my eye on you. That mean threshold of the middle of that candle at 951, if it pierced that like it does at 955, it's not going to run the stops, because we had 3 passes lower. 1, 2, 3. And we're entering that 950 to 1010 time window. So the macro will do what? It'll start spooling price north, reversing it back into a point of imbalance or stops. So there were stops above 936 high. And then our original fair value gap that we were watching as a balanced price range, it returned all the way back up into that. Notice that? So you want to put a notation that there's buy side resting right above the 927 high. Watch that one going forward, and then watch the high of the day. If we run the high of the day, 40.30 and 40.38 and 3/4 is my objective on the upside. As long as we don't run those before the last hour of trading, I'll look for reasons to see if there's a justification for that. I'm not saying there is one now, because a lot can change between now and 3 o'clock, but I would look to do that type of trade unless it just completely goes up there or completely collapses. Now, notice that that's a scenario. That's not a plan A, plan B. Look, I'm right. I'm giving you ideas about what I would look for the PM session. That's what I prefer to see. And I also told you what would negate that. Okay. I'm not going to draw on a chart, scribble line up to this level and scribble down to that level. Okay. And then wait for that to come back. And then one of those things pan out. And then they say, look at this. But if you look at the chart, it did all kinds of things, like a heart attack between that point of where you thought it was going to go, or upside on the downside. You would have been stopped out and they didn't execute on anything. So what benefit is that? How can you learn from that? Nobody's learning shit from that. So that's why I don't do that. I execute using the logic that I teach. When I just show a static chart, I have people bitching to me, oh, it's hindsight. And then when I actually trade the chart using the logic I'm teaching, oh, what's the purpose of seeing this over and over and over again? Are you just bragging? You're just beating your cherry pick trades? And, you need to lose that train of thought. Put that shit aside. If you're here to learn, stop all that bullshit and just sit down and take notes and watch and listen to what I'm saying, because everything I'm bloviating about is what the logic is that I'm using to do it. If there's no real logic behind it, it won't work. But you see it working over and over. How many fucking days in a row now has it been? Remember, I was supposed to start on February 7th? I've been with you since day one. Day one. Every single week, every single day, and it won't stop. Every day there's a run on liquidity. Every single day. All you have to do is identify that based on time. You'll find your 5 handles there, and you don't need to have your full target reached. Don't listen to these clowns that say you got to have a multiple of 20 or R. You got to have 3 to 1. You don't need to have 3 to 1. You don't. If you know what you're looking for, you can make money with 1 to 1 risk, and you'll get lots of those setups over and over and over again. I can smash these 20R, 100R traders and do it with just 1 to 1 ratios, because I can get 50 trades in a day on a 15-second chart and level them using the same thing I taught you in 2022 on YouTube. That model exists on the 15-second chart and the 30-second chart dozens of times in a day. That's what high frequency algorithms are taking advantage of, those minor little fluctuations, because they're pushing volume through that big volume, jamming it in, boom, 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 boom. And all I'm doing is looking when those instances are likely to be unfolding. Then I know I'm on side. Their orders are not pushing the price higher and lower. The algorithm's going to go to that price whether there's enough trades behind it or not. And that's what you don't understand. And that's what I get. I've been trading for 50 years. This guy's full of shit. Well, come out here and do it like I just did. Map it out every minute, every fucking minute candle, every single minute candle. You explain why it's going to do what it's going to do. No, you're not going to be able to do that. This is where you start. And at the end of the year, you're going to be seeing evidence with me and in your own phenomenal precision, fucking off the charts precision, shit that repeats over and over and over again. And nothing is stopping you from learning this except for you. That's it. Nothing's stopping you. What's it going to be an impediment? Time. You can watch the shit later on. It's still going to be the same lesson. What's the difference if you watch a recording of me doing it live? You didn't make it there. You couldn't see it because you're running a business. You're going to school. You can't be up. You got to go to work. Okay. Watch the recordings because it's better than market replay on TradingView, which is stilted. It's like you don't see the candles continuously painting. Okay. You can't appreciate the delivery of price the same way. But you'll watch my recording of that and you'll be able to have that same experience, just like you were there. And those same videos you'll be able to go back to and re-watch them and study it over and over again. Listen to what I'm saying at the time I'm saying it, what I shouldn't see, what I should see, what you should be feeling right now about why price is doing this or doing that. That is experience, folks. You can't get that from a book. There's no way I'm parroting what I'm hearing somebody else say right now, but you're going to hear everybody else parrot what I'm going to say. I want you to do well. I want you to fucking be so successful and happy you made this decision. I'm doing everything I possibly can except for putting you in the fucking trades, and I'm not going to do that. The apt pupil, spending weeks and months with me throughout this year, you're going to start seeing them without me mentioning it. And when you make money, whose credit is it? Yours. But when you make a mistake and you do something you're not supposed to do, who owns that? You. Some of you are still at that stage right now where you still want it to be able to be my fault if you fail. It's never my fault. It's never my fault. I've never told you to push a button to get into a trade. And I didn't distract you from the study time that you should have put in. So it's on you. I'm making it, it's a tongue twister. It is never been as accessible as it's going to be this year. You don't have to pay me. You don't have to love me. You don't have to congratulate me. And I'm turning the comment section off because I'm tired of seeing the love fest. Okay. It's sickening. It's sickening. I appreciate it. I love it, but I don't want that to have those comment sections open on my YouTube videos. Looks like I want that. And it's praise. I don't want it. Don't call me king. Don't call me the goat. Don't call me the greatest of all times. None of that shit. I'm Michael. I'm ICT. That's it. The ghost in the machine. I'm what makes this shit move around. And I'm going to prove it to you this year. I'm going to call every single fucking minute candle right in front of you. And I'm going to outline every single thing, why it should do this and why it shouldn't do that. And I'm also going to tell you when my algorithm will not perform like it should because there's other things going on. There's a hand behind this that you won't see. But I'm going to show you. I'm going to peel back that veil and say, this is where they're going to be doing shit that you don't want to be participating in. And that's one of them today. CPI, you can't be in there. You can't. Because if you don't know what you're doing, it's going to wreck you. And it can take a whole, I mean, this was a kind of like a little bit of a muted CPI performance today. Like I was expecting a whole lot more. And it's really kind of boring, actually. It's kind of like what non-farm payroll used to be for us in the 90s. And it moved around a lot. We don't have that much. I mean, last Friday was amazing. That was awesome. Went way beyond what I thought I was going to do. But generally, they're not like that. It's like a little bit of flurry of something, and then it just dissipates. This is not, it's not showing me much at all right now. And I would prefer to close the charts, which is what I'm going to invite you to do the same thing. Close your charts and start looking at it around 2 o'clock, 2:30, and then watch and see what liquidity pools, what short-term high on a 5 and a 15-minute chart, what short-term highs and lows exist in price, looking back to the left between 2 o'clock and 3 o'clock. Okay. Look for that. And whichever one of those that you see, start studying which one it gravitates towards. Which liquidity pool is it going to reach for? That happens every single day. Every day. And all you got to do is look for a small little fair value gap to work within. And your eye should jump right to it. And see, what you're thinking is, oh, how do I trust the fair value gap? I can see it, but I'm afraid if I get in there, it's going to keep going against me. That's part of trading. That's why you have to have a stop loss. If I knew for certain that it wasn't going to go above a certain high, and there was no way that I could be wrong about it, I wouldn't trade without stop loss. I would full margin every trade with no stop loss. Who the fuck wouldn't do that? But because we can't know that, why? Because there's a hand in this industry that will make a move sometimes when nobody expects it. So you have to protect yourself. They call it the flash crashes. They're not flash crashes. They're all engineered. And people fall victim as the scapegoat as why it happened. That's not how that works, folks. But you'll eat it up and believe it because it's a perfect excuse to, oh, that's why it happened. Okay, business as usual. Let's go along. Just understand that you're not supposed to make money with this. You're not. It was not designed for you to be a participant in it. You are the cattle. You are the sheep that these books and educators that regurgitate the nonsense that comes out of them, they're the Judas goat that you follow right into the slaughterhouse, and you don't even realize it. You never stop to think about the logic that you're learning is the very shit that puts you in that situation. So if you turn it upside down, think about it backwards. Because if that crowd keeps doing the same shit all the time and 90% club loses, doesn't it make sense? I mean, think about it. I wish I would have seen this sooner as a new student and trading and listening to these fucking people I wasted time and money on buying their horse shit. I wish I would have just reversed everything they said and faded everything. I would have been 90% club right away. It's produced for misinformation. And nobody can say that you didn't see this shit unfold like it did. I outlined it. I told you why it should do this, why it shouldn't do this on the smallest time frame that most of you can do on a 1-minute chart. Goldman Sachs alumni are on video. You can still see it on YouTube. If anybody tells you they can time the market and trade with intraday charts, I promise you, they're a con man. Run away from them. Really? Really? That's fucking awesome because you just made me a superstar. By default, you just made me a superstar. All I got to do is keep doing what I'm doing. And you're Goldman Sachs. You're the guys that are supposed to know this shit, but you don't know anything. You know nothing about price. Listen, folks, the professionals that you think are professional and they have all the answers and shit, they don't. It's the people out here that are kicking fucking ass, doing it in the charts, making liars out of all the other bullshit that's out there. That's the mavericks you want to listen to. The people that can get out there and literally roll their sleeves up and say, fuck the bullshit. This is what really goes on. Watch me roll. That's how you determine who's who. I have no problem with someone teaching with a hindsight chart. I've done it for a long, long time. It's beneficial. You need to start somewhere. I have no problem with someone teaching in a demo account. Nope, I have no problem with that. Because if the logic is sound, then you'll be able to know if there's sound logic. But the problem is in this culture today, everywhere, globally, you are fucking lazy and you expect everything given to you for free. Like I'm obligated, and everybody else that wanting to teach something is obligated to cater to you. You got to wake up and realize the world isn't like that. You have to roll your sleeves up and do some work. And sometimes it's going to take longer than you want to. And that's okay. That's a good fucking thing because when you get through it, you're going to feel, oh, like I did it. I feel good. I got through this shit. Now I know exactly what the hell I'm doing. No one can take that from you. You earned that shit. You didn't purchase it. You fucking earned it. When people join my mentorship, guess what? That didn't obligate me to fucking make you perfect. It meant that you now are a part of a crew that has to work their fucking ass off. And guess what? If you didn't do what you're told to do and you fell, get your ass up off the ground and start working harder. Look around, folks. People are fucking making real money. Okay, not demo dollars, not market replay horse shit and reporting at the end of the day, this is what I would have made. Fuck that shit. How much are you putting in the bank? How much are you fucking spending? How much did your fucking broker give you this month? That's the language you need to start talking about. Market replay reports, fuck that bullshit. We're past all that. You have to know how to do this, folks. Your bills don't get paid with hindsight, cherry picked bullshit market replay trades. It doesn't work that way. And you can get encouraged in the beginning, that's fine. But you got to gravitate to what the real shit is. What makes these markets really move? And you can get tricked into thinking you know something that you really don't before you think you know it. There's a whole lot of balancing act that goes along with becoming a trader. And you don't even realize what those things are yet. You have no idea what it feels like to have 10 winning trades in a row. You're going to feel like you figured it all out. I don't need any more study. Shit, I know how to do this. Let me get my live count started. Worst thing you could ever done. I'm glad I lost money on my very first live trade. I'm glad it lost 50% because that woke me the fuck up. Oh shit, this takes me a lot more effort and time. I thought I figured this out. I read through a book, 100 pages. I figured, shit, I got this figured out now. No, I had no idea what I was doing. 1992 was a year of awakening for me. I thought I was up to snuff just by reading one poorly written book. And the worst thing you can do is watch my videos one time and think you're ready, because you're not. You have to put yourself in front of the charts like I forced you and put your nose right in the charts and said, look at this. Look at this right here. This is what you're supposed to be focusing on. Nothing else. Not the previous day's high and low. Not a breaker over here. What's this commitment traders report? I took you right to the heart of the matter right now. And for some of you, it's probably difficult to follow along. And others are like, this is fucking great. This is exactly what I've been waiting for. Yes, that's the crowd I'm preaching to this year, because you've done the work and you're just waiting for that next threshold to breach. Some of you that are brand new, it's still going to be challenging for you. I'm aware of that. And you should be identifying that, preparing yourself for it. Just because I'm going to be in front of you with a live chart does not mean it's all going to be, oh, I figured it out. I know how to do it now. It takes time doing it. And when I'm not doing it, you need to be doing it. And you need to love doing it. It needs to be almost like meditation for you, to sit and observe and watch price paint. Because your brain will identify things that are reoccurring over and over and over again. I don't know if your eye for the fair value gap is your model. I don't know that. You might see breakers as your pattern. You might see optimal trade entries, order blocks. That might be the thing for you. Turtle soup sells, turtle soup longs. Institutional order flow entry drill. I have lots of tools to get me into a move. I'm never going to be short on a way to get into a move. When I know the move's there, I'm getting in it. And to the untrained eye, when you look at my trades, if I show just the little arrows, oh, you're chasing price. Get the fuck out of here. You don't even know what you're talking about. I'm going to get in here and show you every single week examples of what a neophyte would say is chasing price. But you're going to know at the end of the year how that is horseshit. There's 100% measurable risk in that. You'll know why it shouldn't do certain. Like you watch me today. It should not do this. It should not go beyond this. It's like I'm walking this shit on its leash. And you still doubt me. It doesn't matter. It does not matter who believes what you're learning is real or not. All it matters is, does it benefit you? Are you learning? Because if that's all that you focus on right now and you grow and you're understanding each day and you're seeing it work, you're seeing proof of it, folks. This is not after the fact horseshit. This stuff happens every day. It's a beautiful opportunity for you to have a laboratory experiment for yourself to observe what price is doing. And you log that. And the best advice I can give you, and investment that you can make in yourself, is to get a screen recording process for you. So even if you're not in the markets live, like if you're at school, or if you're running a business, or you're working, or if anything that prevents you from watching price action in the London session and in the New York session, in the afternoon PM session for equities, then you should record. And honestly, even if you can do it live, watch it. You should record it every day. Just let it run for 2 hours in the morning, and let it run for an hour and a half in the evening. 3 o'clock to 4:15 or whatever. Record that. Show a 1 and 5 minute chart side by side. It's a small little investment. Okay, like $100 and some. I think I use Camtasia from trades. I'm sorry, TechSmith.com. TechSmith.com. I use Camtasia as a recording uh, program. I love it. I've used it for a long time when I first started doing videos for folks on Baby Pips years ago, 2012. Um, it's an easy process to record it. You can edit everything, and zoom into certain areas that you think are useful for you, and then record that. Do a descriptive title to it, so that way you know what you recorded, the date, the time, the market you were doing, and what your focus about that was, and then log that. That's better than a trade journal. That's the best fucking journal, because in that chart, in that recording, you're going to have your own annotations, and you can watch it. You can literally watch it. Upload it to your own personal YouTube channel and watch it right in the living room or your family room, or where, if you're on the go, if you're sitting in like my son's having surgery Friday, and I have to have something to distract me while I'm waiting for him to come out. Well, this would be something like if you had something uncomfortable, you're waiting into motor vehicles, waiting for some bullshit number to be called because you have to be waited on something. You're waiting for your oil change. You can watch it on your phone, and you can hear your own annotations being spoken and watch the price action. So you're not wasting time sitting around watching Netflix and fucking off. You're constantly pouring this into yourself. You're investing in yourself. Don't waste time. Don't waste time. You got 1 year to do all the right things. Because let me tell you something. If you don't know what's going on right now, just take a look and step back and look around. Shit's getting real expensive. Things are getting hard to get. Food's getting really stupid. And it's going to get worse. And I'm going to have a clean conscience at the end of this year. I've done everything I humanly possibly can to improve the likelihood of you doing better than the average person. Because the average person is going to be suffering. They're going to be suffering in the next 12 months. It's going to get real hard. And that's all I'm going to say here now. But you need to prepare yourself. Make sure you have a secondary income or complete replacement of, because your job may be redundant. There's nothing guaranteeing that your job's going to be there tomorrow, next week, 6 months from now. I have so many students that have come to me and say, I was working, I thought I was doing really great, and they just sacked me. Said I'm redundant, they can't use me anymore. What the hell? Yeah. Are you prepared for that? Are you fucking prepared for that? Most people aren't. You're walking around like a zombie thinking, okay, well, it's the same thing I do every single day. Go to work, I do the same thing, I get paid at the end of the week or every 2 weeks. And you think that they need you. They don't fucking need you. They don't need you. They need you right now. Like I need some fucking lunch because I'm starving. But I don't want you thinking that you're irreplaceable, because they don't need to replace you. They can just get rid of you and save the money. And companies are going to start doing that aggressively right now, because there's a turning point that we're going to enter, and it's going to be uncomfortable, really uncomfortable. It's going to be uncomfortable even for people like me to have money. Having money in the bank is not protection, but there is no alternative. Cash is going away, and you need to preserve what you can, build what you can, and procure as much as you can in terms of resources, things for your home, and make your house ready as best you can, because we're going to enter some real tough shit, and I don't have the answers, and I don't want to be criticized for not doing at least this much. I don't think it's outside the realm of reasonable, given how the Lord's blessed me, and I made a deal, and I'm doing it. I'm living up to my end of the bargain. If you open my eyes up to this, I would spend the rest of my life teaching, and I am. But I'm more, doing more than I ever did, ever this year. I'm sitting with you in live data, something I swore I would never do. Because I know some of you that are running signal services or mentorships or whatever, you're going to be listening to what I'm saying. And I'm in your headphones, and you're going to try very hard to keep up and say whatever I'm saying. So your viewers that don't know me think that you're smart. That's okay. I don't care. This year, you can take advantage of me. I don't care. I don't care that the people are taking my spaces and putting up there on their YouTube channels and monetizing it. I don't care. I'm not going to put a takedown notice against that. I don't care. My focus is right in front of me. It's you. All I'm trying to do is help you. I'm not trying to be your friend. I'm not trying to have a worshiper, a new cult member. I don't want any of that kind of shit. I just want you to understand that I don't have to do this. And just appreciate the fact that I'm willing to do it. And your currency is paying attention, earnestly paying attention, taking notes, and doing the best you can to keep up. That's all. There's no rush. All the things I'm producing are not going to be deleted on my channel. I'm not going to take down the mentorship videos. I'm not going to delete any of it. Nothing is coming down. And it's increasing. The volume in the library is going to increase. There's no need for you to worry. But you have to show up. If you skip a day, watch the recordings, listen to the recordings. Keep it in you constantly. It's only 1 year, folks. 1 year. And I promise you the transformation at the end of this year, you're going to feel so glad you put yourself through it. But you're going to have periods where this is too much. Or I've had enough. I don't like this guy's personality. He cusses too much. Well, I'm sorry. I wish I couldn't. I wish I had a better way of controlling my tongue. But when I get angry or passionate or just, you know, worked up, like I'm hyped up, I know what some of you are going to be able to do. You just seen a young man make $250,000 last year. $250,000. How many of you fucking clowns that talk shit about me made $250,000 last year? Hello. That's the real shit there. So I don't know. Who you want to listen to? Somebody that's making that and students that really put the work in. He earned that shit. I didn't tell him what trades to get into. All on his own. Carved out a niche. And now, if he comes up with a course to show you how he did it, and this is the method that he did and how he got funded and how he worked with the fund accounts and companies that do that, in my opinion, that shit would sell like hotcakes. And all of you have the same opportunity. He did all I asked for. If I had a small part in it, just give me a nod, say thank you, and that's it. And I'll lift you up. I'll lift you up. I'll put a spotlight right on you. Boom, there you go. You earned that shit. You did it. There was no communication privately. Nobody, oh, ICT traded for him. I got a guy literally send me a fucking email and said, you traded his accounts for him, and this is all marketing. Are you out of your fucking mind? Seriously, that young man did that on his own. To be quite honest with you, I didn't know him from Adam until that interview where he did like $28,000 withdrawal. I was impressed with just that. Then I'm looking at his Twitter and he says he's done $250,000. And I'm like, what the hell? How did I miss this guy? Why didn't you all tell me about him? Come on. So, but I have lots of students that are private like that. They don't want to be out there. And I know some of you young guys do. And that's great, but you're still going to get trolled. People are going to be upset because you're doing something they can't do. Their service can't live up to. Their results are nowhere near. And guess what? Smile and wave. Smile and wave and relish in all of it, because that's success. Because you're going to have people always biting at your ass when you're doing it well, better than anybody else. But guess what? The view never changes when you're in the lead. It's always the same opportunity of new money. Always. It's the same way. But for them, it never changes because they're always looking at what you've done and not what they can do. You're in their way. Think about that. If they're hating on you, they know that you're going to do well. They're trying to distract you from doing this. Think, folks. There are some stupid asses out there that are just trying to make a name for themselves when they talk about me, whatever I do, my students. They're clowns, okay? But there are real people out there, and they're going to see more of them this year because as I'm doing this is becoming mainstream. It's accessible to all of you. And you're going to see campaigns to smear me, what I've done, what you are going to do, what you're learning, all that is going to be meant to distract you. Keep your focus on what I'm teaching you. Everything else is horseshit. Everything else. Can anybody take you and pull you to the side and say, you didn't watch me outline this morning? Nobody can do that now. Nobody can take that experience away from you. And you all that have doubted me would have had that experience if you just would have did the work yourself. And that's why I'm doing it this year. I'm removing any doubt, no confusion. It's still going to require a lot of work and effort, but you're not going to have an out where, oh, it's cherry picked. Oh, it's hindsight. He never shows us this. He never shows us that. I've never seen any mentor ever explain every single 1 minute candle before it happens and why it should happen. I've never seen that. You're going to have more people doing it now because I'm teaching you, and my students will be able to do that same skill set. And I'm loving it. I want to see it. I want to subscribe to your channel. I want to support you. There's nothing wrong with that. I've never been against people using what I've taught and making a name for themselves. I just don't like when they teach my shit, rename it, and give no credit to it. Because the Lord himself gave me this. And if that makes you choke because you believe in something other than what I believe in, I'm not apologizing. On that note, hope you found it insightful. Hope you found it helpful in the sense that you know where you're going, which direction we're going to take this community this year, and at least found another way of seeing proof behind it all. Until next time, be safe.